Okay. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I gave the first part of tracking the Forex market together webinar during the European session. At that time, I explained to you how exactly we have to read the market and then try to take positions so that we should be in a position to book profit. Also, in the event if the market goes against, what are the trading strategies we have in order to limit the risk and maximize the profit? At the end of the day, we should be able to get the net profit out of the positions. So I'm going to give the second part of tracking live the Forex market together. And it is a simple market tracking technique using the live market code page. And also we use the three components of the system, namely the derived forecast, market reading, and the trading strategy. I explained in detail how exactly they are to be used during the European session. Then now I'm going to focus more on that of the trading strategy in this particular part, because many of the traders, when they use the hedge, they are really worried how exactly the hedging has to be handled. And for that, I'm going to go back to that of the positions what I have taken during that of the European session and show you what happened to those positions. Now, I explained to you that we can take a buy position as a breakout trade when euro went above that of the initial high and stayed there for more than 30 minutes. So we envisaged further upward move during that of the European session. But they have been holding all along during that of the European session, and now they have started gaining some during the US session. US session starts by 13:30 GMT. 30 minutes passed, and they gained some levels in the case of euro, but still around that of our entry, the market remains. So it's not hedged and it is not closed with a profit. Market is around that of the same level and where we are entered. In the case of GBP, which has made about 50 pips drop from that of the entry, and I kept the buy order 1.3207 and that got filled, and then subsequently they came down to 1.3177, and during that of the European session webinar, and that position was hedged, and then subsequently I kept stop at entry in the hedge because the hedging was making profit and loss alternatively, so they were not going below that of the then low 1.3160. So I kept stop at entry and closed the hedge position and kept another hedge at 1.3147. Then subsequently what happened? During the late European session, GBP came down further and came up to that of 1.3138, and so the position 3147 got hedged, and then again it came down to 1.3138 and started gaining. So I kept stop at entry here at 1.3147, and quickly they closed the stop at entry and they've gone up. And then subsequently I kept another hedge order 30 pips below 1.3117. And now currently the market is around that of 1.3148. And once now I am not hedged, and I kept only the hedge order at 1.3117, and slowly I will gain the level. I'll move the hedge order to the higher level as they gain and go up. And in the event if they come down, then if it is hedged, I'll watch for 30 minutes, and if the hedging is making profit or loss, I'll watch and then handle it as I have done it in the two occasions. And they are expected to make the gaining move during that of the European and the US session, but they have made only sideways move in the case of euro and Australian dollar, and in fact they have gone below that of the new low 1.3160 in the case of GBP. So this is how they make the moves in the market. depending upon the trader's pending position. So in such a situation, we should be in a position to handle our position with care and also with the right determination. There is no question of bullishness and bearishness associated, but we try to handle the position carefully and see that we take limited risk and maximize the profit. And in the case of yen, I kept the buy limit order at 104.70. It got filled, it came down to 104.66 and then subsequently started gaining the level, and it has not hedged my hedge order, sell stop, and slowly it is showing about 5-6 pip profit. So we'll hold USDN also during that of the US session and try to book profit. In the case of Australian dollar, 75.40, I took the buy position. The initial high was 75.25, so I kept the buy limit order 5 pips below that of the market and got filled, and Australian dollar came down below to 75.18 and not hedged me, and they started gaining the level during that of the during the US session. Slowly they are expected to gain the level, and then will be in a position to book profit. So as such, you come across today, during the European session, the market was really subdued. The market was not making either upward or a downward move, excepting GBP USD, which has made about 40 to 50 pips sideways on the downward move. Other than that, you did not come across any significant move in the market. Neither the hedge nor the limit order got filled. There are days in which you come across such situations might be seen, and especially when the volume is low, then the players wait for the traders to commit position, or if the traders are predominantly long, then they test their patience so that the traders holding long position in a hurry try to close the position with a nominal profit or nominal loss, and later on when the traders are not having positions and having a wrong position, mostly like sell position, then the players gain the levels and trap them. So this is what we come across in the market on a daily basis. So we need to read the intentions of the players and try to handle it. So for the year session, I'm going to hold the same positions, and I will watch till 15 GMT along with you and try to find out how exactly we are going to see profit in those positions. Now coming to that of the US session trades, so let me explain to you that my trading system involves three components, namely the derived forecast, then the market reading, and trading strategy. The derived forecast, what I have given it on Monday, that they are expected to make the swing and rise move in the case of Euro and GBP during that of the European as well as the US session. But during that of the European session, they have made the sideways move, and during the US session, they are likely to gain the levels. Let us wait for the market to show that. And as far as market reading is concerned, Euro is still holding above that of the initial high, what it has set during that of the Japanese session. So this is the forecast sheet I showed you, that during the European session, they were expected to make the swing and rise move, but they are not made any significant rise. It was sideways move as such. Then during the US session, they are expected to make further rise as an intentional move. That's what we derived it by following the type of moves they are doing it, but it is slow. So let us see how exactly they are making the continuation of the move. Now, regarding that of the initial high, in the case of Euro, 1.1074 was the initial high. Still, they are holding above that. They are not dropped it. and they are expected to gain further levels. And in the case of GBP, 1.3204 was the initial low. They just breached and pulled it below, and with the 75 pips net change on the downside, indicate that they are handling the Euro GBP cross, now holding low GBP, holding high Euro. They are just gaining the levels in the case of Euro GBP. Similarly, in the case of USD Yen, they are showing negative net change. Also in the case of GBP, negative net change, indicating that they are making the contrarian move here again on the downside in the case of GBP Yen. So you come across quite a bit of contrarian moves in order to handle the crosses. That is why you find GBP is below that of the initial low, and Euro is above that of the initial high. Then in the case of Yen, it came down below that of 104.67 and come above, and they are still holding it, and slowly they are expected to gain the levels. In the case of CHF, they came down, as I explained it, because they have been holding USD CHF below that of 98.47, the initial low, and then subsequently they came down to 97.94, still holding below, and they are expected to make further downward move. And in the case of Australian dollar, 74.87 is the low, 75.29 is the high. It came down, came above that of 75.29 and went up to 74.550 and came down and holding around 75.16, holding around that of the initial high, about 510 pips below, and they are likely to go up and make new high during that of the US session. So the market reading indicate that they will continue with that of the swing and rise move during that of the US session. Currently, during the early part of the US session, they are making the swings slowly towards close of the US session. They are expected to gain the levels. That is what the market reading indicate. Then the next component, namely the trading strategy. So the trading strategy is we use the hedge order to limit the risk. So instead of a stop, we keep the hedge order, so that if the hedge order is filled, we try to find out how exactly the hedging is making profit or not. Then subsequently, we follow the time of the market and see that during the early and the late sessions, the players handle the majors. During the mid sessions, they handle the crosses. So during such early and the late sessions, we try to handle the hedge and see that we are either able to book profit in the hedge, or we are able to stop it out at the entry and keep for the hedge order to limit the risk. And once they start making the move in our favor, we try to quickly raise the levels in the case of hedge order until we are able to keep stop at entry in the buy position. Then we try to book profit on the buy side. So this is how the trading strategy will be. So for that, we try to follow the market moves. So the market moves are vital, especially whatever the type of moves they are doing it, which will indicate what is going to be the subsequent move in this particular session. Now, we can broadly classify the moves into the quick moves and the slow moves. The intentional move and the swings are the slow moves. They are slow pip by pip. They gain or lose levels. Whereas in the case of stop and false move and the extended move, they use a specific type of order. As a result, which will simply pierce the market and go to the higher level or lower level without filling the orders in the intermediary orders. That is why you come across in the trading platform, sometimes you keep the hedge order or the stop. They don't fill the stop, and then subsequently the market fill at the highest level a buy stop or the lowest level a sell stop. That happens in the market because they use a specific type of order which is called all or none order, and with which they try to place a huge position order as a single trade. As a result, that order may not find a matching corresponding buy or the sell order. As a result, you will find it will be searching for matching order in the market on the higher side, and thereby all the stops will be exposed. on the higher side. Then the players place their regular order and fill all the stops. That is how they handle the stops and earn money. And similarly on the downside, also they make similar moves on the downside. A sell stop as all or none order, and which will be very specific order. Look for a specific quantity of the corresponding sell buy position. So when it is not available in the market, it will be searching for that until it goes about 50-60 pips. And that way the stops will be exposed and the stops will be filled. So the players know how the bank facilities can be used effectively in order to make the stop ends. And they are all very quick moves. So stop and false move are also quick moves. Similarly, the extended move on the downside and the upside, they do it mainly in order to handle the market quickly, mainly to trigger the stops. Then the intentional move is the slow move, which happens for 2 sessions and more than 2 hours. So first session, the intentional move on the upside started during that of the European session. So they will continue to do that during that of the US session. They are making the swings now during session start time. So how they make the sequence of these moves? They initially start of the day, they set the initial high and the low by making an upward move or the downward move as a stop and primarily. Quick upward and a quick downward move. Thereby the spread is being made for the day, and the initial lows and the highs are being set around 3:30 GMT, and that is being used as a reference level by the other players. And that is why we also follow such initial lows and the highs, not blindly assuming something. So whatever they follow, we try to follow. If they talk in Greek, then we also learn Greek and try to track them so that we are able to understand what they are trying to communicate and do the market manipulation strategies. So by making specific type of moves, then we are in a position to really understand what the players are trying to do it and trade accordingly without any market fear. The intentional move we track and take positions so that we'll be able to continuously hold the position for 2 hours and book profit. The swing is the type of move they do it during that of the mid sessions, especially to handle the crosses. So one currency might be near that of the high, making the swing, another currency near that of the low, making the swing. That sort of moves they try to do it during that of the mid sessions in order to handle the crosses. Now, they do the moves in sequence. So always they alternate the extended move with that of the intentional move. That we need to understand. So every day you'll come across an extended move as a quick move and an intentional move as a slow move. The extended move can be on the upside or on the downside, and the opposite will be the type of intentional move. So any quick downward move, if you see, then you can understand the intentional move will start from that time onwards, and they will quickly drop the market, accumulate the buy positions, hit the stops and accumulate the buy position, and slowly gain the levels. So they make the extended downward move and slowly gain the level. This is what they do it in order to create the fear to that of the traders, induce them to liquidate the positions. Later on, they accumulate all such lower level sells, and higher levels they try to sell, and the players try to sell, and the traders buy as a breakout trade. And that is how they continue to induce the traders to buy high and sell low. That means the traders continue to lose the money. So we have to come out of such situations. We have to really use our common sense and the logistics, understand it is a manipulated market and man-made market. So men trade against the set of other men with the muscle power, namely the money power. So with the help of the money, huge money power, they are able to place huge big orders in the market and trigger the market. So we having a limited equity, we cannot try to fight against them. We can only try to find the limitations and trade along with them. That is what I focus. So we watch the market for about 30 minutes from the start of the session and then try to take a buy position near that of the low. In the event if they stop cutting the low and not breach the low for more than 30 minutes. Otherwise, we also take a buy when they breach the high, initial high, and stay above there for more than 30 minutes. We try to take a buy. And as far as sell order is concerned, we try to take a sell near that of the high when the high is being formed and not breach the high for more than 30 minutes from the start of the session. We try to take a sell position. And in the event if they breach the low and stay below that of the initial low for more than 30 minutes from start of the session, then we try to take a sell position. So that's how we try to enter into that of the market. And then we keep the hedge, the profit taking order 45 pips or 30 or 45 pips away from that of the entry, and keep about 30 pips hedge order to limit the risk. And the hedging is used, and especially in the US trading platform, the hedging facility is not available, but in other platforms, they are offering the hedging facility. So in the event, if they are able to use the hedging on the same pair, then you can take a buy as well as sell position in the same currency, and that will not be closed. Whereas if the hedging facility is not available, then if you got a buy position and try to take a sell, immediately the sell will offset the buy position. As a result, the buy position will also be closed, and that we use it as a stop. But if the hedging facility is provided in the platform, we'll be in a position to hold a buy as well as a sell position. So in such a situation, what happens? We can use the buy position separately as a trader who is doing the buy and sell trade. Similarly, the sell position we can trade separately, assuming that we do the sell and buy trade in the market separately. As a result, to handle the buy position, we try to trade like a buyer and we try to take like a seller when we handle the sell position, instead of feeling that we get struck with that of a higher level buy and the lower level sell. So that perception is very much needed. And once the position is hedged and the hedging is not making profit for 30 minutes, we close it with a nominal loss or by keeping stop at entry, as I explained. In the case of GBP, I had done it from that of the European session. And then subsequently, keep another hedge order to limit the risk. Once they move the market in our favor, we move the hedge order also higher so that we reduce the gap between the buy and the sell. And in the event if the hedging is making profit for more than 30 minutes, we understand is that they are making a move opposite to our expectations. So we keep stop at entry in the hedge and wait for the market to go and form the new low. And once the new low is formed and not breached, for more than 30 minutes, we try to close the hedge with a profit and keep another hedge order to limit the risk 30 pips below. And once they start gaining the level, we trail the hedge order upward. So this way, we book profit on either way moves of the market. In the event, if they continuously drop, certainly when they continuously drop, we have got a buy position as well as sell position, and they are continuously dropping. We do not know what to do. You need not even think in a big way of any trading strategy. You can simply close your buy position with a hedge with a determined loss of 30 or 40 pips, irrespective of the move in the market of 500 or 600 pips. That way, we'll be able to limit the risk using the hedge. And the stop means if you use the stop, sometimes they close the stop and afterwards the market bounce back, and you feel that if you would have held the position, then you could have earned easily on the buy side. Sometimes what happened, they hit you a stop and gain the level, which will induce you to widen the stop from that of the buy entry. So you keep about 70 pips hedge order, a 70 pip stop or 100 pip stop or 150 pip stop. Sometimes some people keep the stop below that of the third levels, the support, and keep the stop about 200 pips below. They even if they suddenly make a drop of that nature, by making an extended downward stop, and if the stop is filled, will you be in a position to withstand such a loss of 200, 300 pips? So you have to really foresee that and then try to use such trading strategy of keeping a wider stop. So keeping a wider stop is not a wise strategy. Always try to keep the hedge order or the stop as tight as possible and try to see that you are able to close the position within the same day. As I explained during part 1, that this is the last week of the month of July. So obviously the players are here to handle the derivative market. So in such a situation, what we have to do is trade with care. And those who have got limited equity, we have to really think twice before entering into the market, because they will make whips or moves like how they had done it yesterday in the case of USDN, went up to 106.75 and then came down to 104.49 today. So this sort of either way big moves, they will try to do it. There is no question of bearishness and bullishness associated. They use rumor or they use the data release or anything for that matter. And if somebody sneezes also, they will say that no, there could be a hidden agenda behind that, and they will make one big upward or the downward move. So keep in mind that last week and the first week of the month, in order to handle the derivative market, they will make whips or moves. If you have got limited equity, then you have to be very, very careful. You should not try to take too much of exposure or not to have too many positions. Try to take limited positions and then try to use the hedging to limit the risk and capture the profit using a trailing stop in a profit making position. So as far as the trading is concerned, so I will review the positions what I had taken it during the European session. Here. So Euro, I had taken it at 1.1105, which is making a nominal loss of about 4 pips. And GBP, still they are at a lower level, so made about 82 pips negative net change. So that means that they will hold for some more time and only then gain the levels. So they are handling now the crosses for the weekend, because tomorrow, Friday, they wanted to handle the majors. Before that, they wanted to handle the crosses, and thereby they are making many contrarian moves, like Euro is in the positive net change and GBP in the negative net change. That means Euro GBP has gained. So if you look into that of the code page, you will be able to understand. Euro GBP, they gained about 85 pips. So in order to handle the crosses, they are trying to make such moves now. So when you take positions during that time, obviously our patience will be tested. So we need to accept it and patiently trade and earn money from that other market. Then similarly, USDN in the negative net change and GBP is in the negative net change. As a measure, a cumulative downward move is seen in the case of GBPN. Look into that of GBPN, 170 pips on the downside, because we see yen is making about 62 pips negative net change, and GBP is making 84 pips negative net change, and 160 pips negative net change in the case of GBPN. And also GBP, which is making negative net change, and USD CHF is also making negative net change, which is again a contrarian move. Because of that, GBP CHF will be showing a negative net change in a bigger scale. See, 152 pips. So we can easily understand that the players handle all the majors and bring in the volatility in the case of crosses. So simply looking into that of the charts and trying to find out that they could gain the levels or lose level in the case of the crosses. And many people are of the opinion that whenever there is going to be a prime data release from US or Europe, then they think that it is better to trade the crosses rather than to that of the majors, because majors might be affected by that of the data release. But we have to keep it in mind that the players make contrarian move and only then bring in volatility in the case of crosses. If they don't make contrarian move, instead if they make the USD gaining or the USD weakening move, the crosses will not make any big move. So they have to necessarily make contrarian move. At that time, if you take positions in the case of crosses, you will be really benefited. But if they are making USD gaining or the USD weakening move in the market because of the data release, then you find that the crosses are not making any big moves. So you have to understand when they are going to handle the crosses, when they are going to handle the majors, and accordingly take positions. So now they are busy in handling the crosses before the weekend. So now after handling briefly the crosses, they will come to that of the majors from that of the mid-year session and gain level. And tomorrow for weekend, they are expected to make some good upward move in the case of Euro and GBP. So tomorrow I'll be presenting the webinars during that of the Asian session, that is 5 GMT. I'll review the forecast, what I given it on Monday. So Monday I gave the forecast about the market, and that I will try to review it tomorrow during that of the Asian session. Then during that of the European session, I'll be giving two webinars before that of the prime data release, namely the US GDP data by 12:30 GMT. They are expected to firm up during that of the GDP time, and subsequently they are expected to gain more levels. And again next week we'll come across volatile move. They'll make a drop again, make all the downward stop, and then start gaining the levels. So keep in mind that the players are here to create the market sentiment and act against that of the traders. So we have to be doubly cautious while trading it and use the hedge order to limit the risk. Now they are making further downward move in the case of GBPs. They just cut the low by 2 pips. So they are just inducing those who are holding long position in GBP to liquidate by slowly cutting the new low when the other currencies are holding high. So which clearly indicate that they are trying to make a brief upward stop in the case of Euro GBP, downward stop in the case of GBP CHF, downward stop in the case of GBP Yen, etc. After that, they will come to that of the majors, start gaining the level again, and telling that it could be a technical bounce back or whatever it is. The interpretation may be anything, but ultimately what they intend to do, we need to read from the of the live market code page by looking at the of the net changes they are making from time to time. So if you got any question, kindly ask me it in the chat window. I'll be willing to answer to that of the questions. Alexandra says that very insert webinar. Thank you for your compliment. And basically, it is not something I wanted to envisage. Not the appreciation, of course. It gives the moral boost for anybody to continue to give the webinars. Most important thing is I want the traders to understand how the market functions, not the way they are explained in the world, because they are explained in the world as if the market is so huge and it cannot be manipulated, and the traders take the buy as well as sell positions, and because and accordingly the market makes big upward or the downward move. And sometimes you come across that there are bullish traders and the bearish traders, and they fight against each other. These are all some of the myth they try to create and give that imagination to that of the traders that the market is uncontrollable. But actually, if you see, the market is totally manipulated. The players try to hold the market and create the feel and create the sentiment in the market, and then subsequently act against that of the traders. So now if you look into that of the market looks very subdued, making very sluggish move. And if you think that it is going to be same throughout the day, we'll come across sudden surprise. They will simply release some news or events and say that, okay, because of the data, the market has moved up. Similarly, yesterday, everybody was waiting for the FOMC to be announced, and then subsequently, After that announcement, they gained the levels in the case of Euro and GBP. What happened to that of those gains? Euro is holding some, but GBP has lost. So this is how they make the moves in the market. So we cannot think that the fundamental is going to be working all through, because FOMC is supposed to be a very, very prime fundamental information till the next announcement, which is going to give an influence in the market. But its influence is less than 24 hours. Before the US session starts for today, the market has just shown its own moves. And people will say that because of various other factors, various other data released from different countries. So this is how sometimes they will say that the data which is released from a specific country is discounted. Sometimes they will say that it is very important, and which gives that insight that the subsequent data release is going to be very, very important. Similar to the FOMC, even though there is no change in the interest rate decision, they said that there is a likelihood that next event there is going to be an increase in the interest rate. There is no fear of further decrease in the interest rate. That is how they give the interpretations from time to time, and then try to bring in surprise to that of the traders. So always keep in mind the surprise is the enemy for the traders. So whenever there is a sudden move in the market which happens against your expectations, you become surprised, you become tensed. So to start with, you become anxious and sit in front of the chair and try to find out what you should do with the holding position. Instead of that, you plan beforehand. Try to see that if the market drops or moves against me, what are the steps I'm going to take? If the market moves in my favor, what are the steps I'm going to take? So that if it comes down, you have already thought about it. So it is not going to make you stunned or make you spellbound. Instead, you have already the strategy developed, and you have got the hedge order to limit the risk. And once it is hedged, okay, we are going to watch for 30 minutes to find out whether the hedging is making profit or loss. So we have sufficient time for us to take the decision. Whereas if you use the stop, then invariably when the market makes quick moves, you find it extremely difficult to take a quick decision, whether to move the stop away from the other market or just to stop it out and relook at the market and things like that. Once you keep the options plenty, then you get confused. You wanted to really see that you're going for the best option so that you don't lose money. But in the process, you widen the stop away from the other market, and then later on incur a big problem of accepting a bigger loss or a margin call. So never do that. Instead, you accept a predetermined loss or a predetermined level. If it is hedged, you watch for 30 minutes and see how the hedging is making profit or not. Accordingly, you trade it. Now there are two possibilities. They can continue to drop GBP, or after holding low and handling the Euro GBP cross, they can come back to GBP and gain. There are only two possibilities. One, GBP could gain again towards close of US session, or it can go down further. Okay, what are the steps I have? I have a hedge order at 1.3117. If it goes below that, I'm going to be hedged. I'll keep stop at entry if the hedging is making profit. And if they continue to go down, doesn't matter. My usable margin will not erode because I have got the hedge order, and which will limit the risk. And in the event, if they come above, then my hedging will be closed. I'll keep immediately another hedge order. And in the event, I have to go to bed and I am not in a position to watch, then simply you can remove the stop at entry in the hedge order, and both the positions will be, buy as well as sell will be intact. Let the market move anywhere they want. And tomorrow when you continue trading, you can continue with that of the hedge and wait and find out how exactly they are making the moves with the hedge. And if the hedging is making loss of 40 pips continuously for about 2 hours, then you can close 40 pips with a loss, and you will be able to earn more than 40 pips on the buy side. So when you watch for 2 hours during the extended move, and if it is continuously making loss, and you will find that subsequently they will gain the level. So you have to understand that the type of moves will give us a very clear picture, if you follow it carefully, how to handle the positions. Here is a question. How is the USDN movement from here till tomorrow? BOJ announcement. Yeah, for BOJ announcement, they are expected to make an upward spike in the case of USDN, and also the N crosses to start with. And later on, for that of the European session, they are expected to gain the levels in the case of Euro and GBP on the upside. So they are expected to gain more levels during that of the Japanese session for the BOJ announcement, and subsequently during that of the US session. Always in the case of USDN, if you notice carefully, during the European session, they will not bring in much of an activity. They will try to handle USDN and the Yen crosses during that of the Japanese session, followed by that the US session. So they are expected to gain level to 106 and then further gain for the weekend during that of the US session. I'll be giving the Asian session live market analysis. At the time, I'll explain to you with the help of the levels how exactly they could make possible moves during that time. Any other question, please? The questions, I can answer to those questions. So try to follow the type of moves they are doing it in the market, and that is very vital. And also note down the session timings. So these session timings clearly indicate to us how exactly they will be making moves. So 13 to 30, 13:30, 13 to 30, 13:30 is the gap time before the start of the US session. Then 13:30 to 15 GMT is the early US session. Then 15 to 19 GMT is the mid US session. Then 19 to 20:30 is the late US session. So the early and the late session, they handle the majors. Mid session, they handle the crosses. That is what they are trying to do it now. Slowly, they will handle the crosses by making some moves, and then subsequently, they will, from that of the mid session, they will start gaining the levels in the case of Euro and GBP as well as USD Yen. And the gap time, they will make the false move. So if you take the 24 hours market cycle, they will make the early session an upward or a downward stop to start with that day. And then subsequently, they spread the gap between the high and the low and set the initial low and the high around 3:30 GMT. From between 2:30 and 3:30 GMT, they set the initial lows and the highs. 2:30 they set the initial low, 3:30 they will set the initial high. If you watch carefully, you will be able to really understand. That is used for their communication purpose. Then subsequently, they try to handle the majors either on the downside or on the upside during that of the late session by breaching the initial high or initial low. If it is a normal day with an adequate volume. Otherwise, if it is the start of the day, start of the week, then probably they make the subdued moves. Depending upon the volume, they bring in all the moves. Then during that of the gap time, 7 to 7:30 GMT, they make a false move. If they want to rise during that of the European session, they make a dip to start with and then start gaining the levels during the European session. Early session, they gain, mid-session, they swing, and late session, they gain again. Then afterwards, the gap time, they try to make a dip if they want to make a rise. Or if they want to make a slide, then they gain the level during the gap time and set high during the early part of the US session, start making the slide after a data release or whatever it is by 14 GMT. Then subsequently, during the gap time, they make the opposite move. So you find that in all the three sessions, they don't make similar moves. They don't do hat tricks. They only make similar moves for two sessions. And the third session will make opposite move. That means the intentional move followed by that of the extended move, which will be opposite to that of the intentional move. And in between, they will make the swings during the mid session, the stop-ins during the earlier, the late sessions, Then false move during that other gap time and before the data release time, around 12:30 GMT, the prime data release, or around 14 GMT of the US data release. Any other question, please? That's how the entire day they try to handle during that of the 24 hours market. So these are all the type of moves. Make a note of it and watch carefully with the help of the live market code page. Don't look for any chart. You only look into that of the live market code page. You can easily understand how whether they are handling the majors or the crosses by looking into that of the net change level, so that you know that they make contrarian moves by showing positive net change in euro, negative net change in JPP, because euro is showing the USD weakening move, GBP is showing USD gaining move, and that is a contrarian move. Similarly, USD yen is showing USD weakening move, GBP is showing USD gaining move is another contrarian move. Then GBP is showing negative net change as a USD gaining move, whereas USD CHF is showing negative net change as a USD weakening move, which is again a contrarian move. So by making such contrarian moves, in the case of the majors, 4 majors, then also in the case of commodity pairs, they are bringing in the volatility in all the crosses. So if there are any questions, you can ask me. Okay, I don't come across any question here. So I take this opportunity to thank FX Trade for the facilities provided to present the webinar. And thank you all for your kind presence and also patient listening of the webinar. And I'll come back tomorrow during the Asian session and give the Asian session live market analysis webinar. My website address is www.iknowindices.com, i-knowindices.com, and my email ID is doctor@iknowindices.com. The Skype chat, if you want to contact me through Skype chat, it is iknowindices@hotmail.com. And Yahoo, iknowindices@yahoo.com. My phone numbers are given. And do you have a Twitter account? Yes, I do have. And @ Dr. Sivaraman is my Twitter. I'll just type it out. Okay, thank you. So it is not a trap that you contact me, I'll try to convert the contact into business. It is mainly to give explanation if you are not able to understand what I explained it. Because I don't coach people. I normally expect the people to get convinced and see that they will be able to really get the benefit, and then subsequently come to me for any of the trade help. Otherwise, I am willing to extend all the help without expecting any reward, and wanted to see that small traders are able to earn money from the other market. Because see, when the players and the platform providers trap the traders, those who are in distress condition to earn money, and I do not want to be yet another cannibal of trying to take away their money. So please understand that you are free to contact me. I'll be certainly extending help without expecting any sort of monetary benefit. Okay. Thank you one and all. Thank you, FX Trade. It's a great pleasure talking to you people during that of the webinar time, and looking forward to your further interactions. And I want the traders to get rid of the market fear and trade wisely using simple logistics to earn money from the other market, rather than complicating their studies and lose money. Because we all come to the market not to lose money, But that is our objective and that is our clear-cut idea. But we get trapped. So avoid getting trapped during such market moves. Understand that market is manipulated and we need to trade smartly, and only then we will be able to earn money. Don't become addicted to trading, or don't trade, and don't try to earn back all the lost money in one trade. That is next to impossible. Wish you all happy trading. See you tomorrow to have further interaction with you all. Thank you.